Hi, this is Dr. Mark Santa from Breakthrough Coaching. I'm here with Wendy Lee. Hi, Wendy.
Hello.
And we're going to answer your questions about the PPP funds and forgiveness. It's July. What do I need to know now? We're going to give you the latest on all of the updates on what you need to do to be able to apply for forgiveness and fill out the forms that are going to be heading your way soon. So, Wendy, let's hit it. First question. Wendy, what expenses can be forgiven?
So likely you've seen this list before. We all know that payroll costs are included. It is now a minimum of 60% of what you spend needs to be pushed towards payroll costs. So it's your gross salary, so that number before taxes comes up. Now we are maxed, we probably have seen this before, at $100,000 for an annual salary. It does include any PTO or sick leave that the employee may be paid, and any qualified paid leave, but it does exclude anything from the FFCRA, that Family First Corona Act, because that goes towards a tax credit. So you can't get credit for it here and credit for it later. So if we all know, well, most of you know that healthcare offices were exempt from having to do that, but if you've chosen to, then you can get that tax credit later. So don't include those in here. Bonuses do qualify, but remember, you still need to stay, even with bonuses, under that $100,000 mark, and we're going to give you an actual number for that a little bit later. And if you've decided to do, lots of people will use the word hazard pay at some point in time, those are also included. You can also do forgivable amounts for any covered benefits for employees. Now, this does not count owners who file with a Schedule C. So if you file with a Schedule C, you are not allowed to use these amounts for yourself. But if you do, if you're a W-2 employee, you can. And those are the healthcare expenses and the matching for the retirement contributions. Taxes can also be included, but only the state taxes imposed on employee payroll paid by the employer, such as unemployment. Do not include the federal taxes, the employer portion, and do not include the employee portion of the federal taxes. Remember, we're using the gross wages here. There's some additional expenses. Now that number was moved to 40%, so you can use it for interest payments on mortgages, for any real or personal property. But remember, those loans needed to be in place before February 15th on 2020, and you cannot make any prepayments or payments of the principal. It's just the interest payments. You can also use the funds for rent obligations on real or personal property under any lease agreements that were in force prior to February 15th, and any utility payments for the business, electricity, gas, water, transportation, telephone, internet access, and all of those had to be in service before February 15th. So Mark, what is the max I can pay a $100,000 employee and use this for forgiveness?
So Wendy, the $100,000 of annualized pay per employee depends on which of the two options for covered periods that you choose. So if you choose the 24-week period, it gives you a longer runway. That number jumps up to $46,154 from the 8-week period of $15,385. That's a very, very big difference, plus any non-cash benefits that employee might receive. So Wendy, what's the max that an owner of the company can take and have forgiven?
So again, that depends upon what covered period you're going to choose. And these numbers are based on your 2019 W-2 or your Schedule C. So owners have a different type of a cap. You can't just raise your salary however high you want it. You're going to be capped on what your compensation was last year. So if you choose the 24 weeks, you're going to be capped at 2.5 times what you took home in 2019. So that's your W-2 number or your net profit on your Schedule C, and it maxes you at $20,833. If you choose to use the 8-week period, you're going to be maxed at $15,385. It's basically your profit divided by 52 times 8, but you are maxed at $15,385. So if you only made $60,000 on your W-2, then you can only take 60,000 divided by 52 times 8. You can't necessarily max yourself if your numbers don't hit that. So, and this is an important thing because they've put this 2.5-month cap in there because this allows for the purpose of the loan to be upheld. The purpose of the loan was to keep people working, not necessarily just the owners, but all the employees, and keep them off unemployment. So this was put in place so an owner can't just fire everybody, have a whole bunch of good reasons why, and then pull all the money to their salary and then get it all forgiven. So it really puts a really great checks and balances system in. Annoying, I know, but again, it was necessary. So what's going to be the maturity date on this loan?
Well, Wendy, if you started your loan, initiated your loan before June 5th, 2020, which many people did, you're locked in at 2 years. However, borrowers and lenders together can mutually decide to extend to 5 years. Now, after June 5th, this maturity date of the loan is for a 5-year period.
Excellent. That's usually because the loan docs you signed said 2 on it, so they can't change them without another signature.
Exactly. So Wendy, when will I have to begin paying the principal and interest on my PPP loan?
So you don't have to pay any principal, any interest until your loan forgiveness application comes back and you've been forgiven. But you have to put that application in within 10 months after the end of your loan forgiveness period. So if you've chosen 8 weeks, you have 10 months after the 8 weeks to apply for forgiveness. Same thing with the 24 weeks. You've got another 10 months to get those applications in. Now, we don't recommend you wait and get it down to the wire. As soon as you're able to and your lender's ready and you're finished with your covered period and your payroll reports are all ready, go ahead and submit for the forgiveness application. But you're not going to have any interest or any principal due until you hear back about your forgiveness amounts. So I've heard that I can defer my payroll taxes. Is this true?
Well, Wendy, both the CARES Act, that's the original PPP loan, and the Flexibility Act, this was the act that was passed in June, allow for some deferral of taxes. However, as Breakthrough Coaching, we really recommend that you do not defer taxes, as they're simply going to compound. You're going to end up with a larger amount that'll come due. Taxes don't just go away. They're not forgiven. And so we believe it's a lot better to budget and pay as you go. It's always a great rule of thumb not to owe the IRS any money.
Yeah, we live by that.
Mm-hmm. So Wendy, how will I apply for the loan forgiveness when I'm ready?
Okay, so there is an application that is released. We're going to go over that. And they've released an additional application. It's called the EZ. So I joke, back in the day, you young docs will have no idea what we're talking about. But back in the day, you used to have to do your taxes with a pencil and a piece of paper all the way through. It was this big old application, and it had, if this, then this, if this, that. It was confusing as all get out. So then they made an easy application if you didn't have a ton of things on there. So they did the exact same thing here. There's an application that's 4 pages and you have to use it for certain reasons, but if you qualify, you can use the easier application. A lot of lenders are in the process of figuring out what this is going to mean for them. Many of them may have a portal. So we're going to tell you just to wait instructions from your lender. They're trying to figure it out. If I were you, I would not want to be the very first 2 or 3 weeks of people getting forgiven. I'd want them to figure out the process. So I'm just going to wait just a little while. But you also have to wait for your 941s to be available. So like my last payroll for my covered period was last week. So it was in July. So that's the beginning of the 3rd quarter. So I'm not going to have payroll reports ready until the fall. So that's the soonest I'm going to be able to apply for forgiveness. So there's no rush on this. It's not first come, first serve. Just kind of hold back, gather your information, and when your lender's ready, go ahead and apply. So this is what the application looks like. It basically is asking for your basic company information, how you pay, your frequency of your payroll, your loan information, and then your line items of what were your payroll and non-payroll costs, what were your adjustments if for headcount and for salary, what's your potential forgiveness amount, and then they do some calculations, what's your real forgiveness amount. You also have to make some certifications. Basically, you have to attest, I followed the rules for spending. I'm attesting that these amounts are correct, and I verified them with documents, and I have those documents if you want them, and all information is true and correct. And the tax documents that you're quoting in here must be the actual documents you submitted to the IRS. You can't have a different version. The full application has a couple Schedule A and worksheets that work hand in hand. It's almost like you fill them out and push numbers back. It's going to help you figure out your cash compensation and your non-cash compensation, what your compensation to the owners are, and if you had any headcount reductions or salary reductions, how you calculate those and what you need to do. It takes you all the way through all of that. So it says it's a full page application. It's really 5 pages.
So Wendy, how did the forgiveness application change after the new Flexibility Act?
So a couple key changes. Of course, we have heard that they've changed the 8 weeks to 24. Again, they changed the 75 to the 60. So the application looks exactly the same. Just change those numbers on there. The treasury.gov website, if you haven't seen it, you can go there and download both the application and the easy application and all of the instructions. If you've seen it before, but you're going back, they used to be one 11-page document. Now they're separated out. So there's actually the application, the instructions, the easy application, and the instructions. You can read them all. You can see it's pretty simple. It's not a super huge thing. They've modified the amount, so it really gives you, very much says, you know, the max you can put in here is the 15,000 or the 20,000. It goes through all of those. It added some certifications that you were on. This is a really nice change that they made, that I was unable to hire due to my business activity being decreased because I'm compliant with OSHA, HHS, and CDC guidelines. There was further documentation that came out a couple days later that said that state regulations are also included in there, because likely the state regulations were just expounding upon the federal regulations. So if you're not allowed to be at full capacity, then you're not expected to rehire if you can't do that. They've also made a new FTE section that you're able to skip the reduction if you meet one of these 3 criteria. So first one, no, I didn't have any headcount reduction, or I qualify for safe harbor number 1, which is I was not able to fully operate, which we just discussed, or safe harbor number 2 is that rehire date. It used to be June, now it's December 31st. If I rehire everybody back by the end of the year, then my headcount will not be I will not be punished for it. So the easy application, let me move our faces out of the way. You can use the easy application if you can check one of these 3 boxes. So if you are self-employed and at the time of the application, you're a sole proprietor with no employees, you can go ahead and use the easy. If you had no salary or wage reduction, so everybody's hourly rate or their yearly rate stayed the same, and this excludes the 100,000 because you were forced to reduce that, and you had no headcount reduction. So this includes not being able to rehire because of being decreased. I looked for somebody, but I just couldn't find anybody good, or I tried to hire my staff back, but they said no, those will not count against you. Or if, again, you had no salary reductions and you were unable to hire people back because you were in compliance with the state and federal regulations, and I'm not able to rehire my staff. So basically, if you have any reason to ignore the headcount reductions and you didn't reduce anybody's salary, you can use the easy application. Here's what it looks like. Very straightforward. It just takes the highlights down. You know, what were your payroll costs? Did you spend 60%? There's no mentions of any salary or headcount because they said you had to certify that you didn't use them. It's very, very easy to do this. It shouldn't take very much time at all. They added a couple extra certifications that, yes, I do qualify to use this form. So that was a whole lot of information, but Mark, what else do I need to submit with my application?
Well, when you write on each application, it clearly lists out the documentation that you'll need to submit and the documentation that you'll need to retain, your records that you'll need to retain, but not submit. So for payroll, you'll have to verify cash compensation, non-cash benefit payments. You'll do this with your bank statements, your third-party payroll reports, your 941 tax forms, any canceled checks that you might have, you'll want to retain those. For non-payroll, you'll need to verify the existence of the obligation prior to being established prior to February 15th. That means mortgage interest payments, and you can use your lender amortization schedule. You can also use your canceled checks, rent or lease payments. Again, you'll use your lease agreement and any canceled checks that you might have. For utility payments, you'll want to have your invoices from February 2020 and the covered period, including canceled checks and account statements. Now, you'll want to retain the documentation, your payroll reports by employee that show no more than 25% reduction in headcount. Again, if you've had a headcount, but you've made job offers that were refused, if there are any firings for just cause, voluntary resignations because folks didn't want to come back, or that they reduced their own hours, they requested that they were reduced, or the fact that the pool of employees in your area, in your market, just weren't suitable for the position. And this is going to happen maybe in associate positions, any specialized employees who require specialized training, somebody who's working with insurances or working with patient finances, all of those things, certainly any type of coding compliance. You want to keep that documentation. Of course, if you didn't have a reduction in full-time equivalents, you want to keep that documentation. And again, as you know, you're excluded from reduction if your business activity was reduced because of CDC, OSHA guidelines, and you'll want to retain this documentation as you would all of your business records for 6 years. So Wendy, I've submitted my application for forgiveness. What happens now?
Now you wait.
Yes.
So you submit it with the lender, you just wait and see what happens. Now that everything's been changed to the 24-week period and this 60%, very few people are not going to get forgiveness. So lenders are going to review this application. They're going to make a decision regarding your loan forgiveness. And it's been said that they have 60 days to do this. The lenders are going to confirm that they've gotten your application. They're going to confirm that they've gotten your supporting docs with it. So you got your app, you got your documentation they had to give up, and you're going to confirm your calculations on your application. So they're going to review to make sure that your math is correct. So it's been said that lenders are expected to perform a good faith review in a reasonable time of the borrower's calculations and the supporting documentation. So they listed this example that a minimal review of calculations based on a payroll report by a recognized third-party payroll. So they're going to make sure your numbers match, that you put everything on there right, and that you multiplied by 0.6 correctly. They're going to do a more extensive review if your payroll costs are not documented by a recognized third party. So essentially, they're just going to make sure that your math is correct.
So Wendy, did they change the June 30th rehire date, sort of that we used to call that the Hail Mary pass, to bring people back to full head count so that I can have forgiveness?
Yes. So if you did any salary reductions or headcount reductions, the original had that safe harbor that you could bring them back by June 30th. So then the June Act, when they pushed everything out to 24 weeks, they went ahead and pushed that out as well. So we have until December 31st to restore any headcount and or any salary reductions that you did. Okay, so we've talked about this a little bit. There are some reasons that you can ignore changes in headcount. What are those?
Well, you can exclude reductions in full-time equivalent employee headcount if, number one, you made good faith written, and this is key, it's a written offer to rehire the employee or restore their reduced hours. Number two, that the job offer was for the same salary or wage and the same number of hours as the employee earned in the last pay period prior to the separation or reduction in hours. The forgiveness app says February 15th. Three, that offer was rejected by the employee. 4, you maintained, again, records documenting the offer and its rejection. And then finally, 5, you also informed your state unemployment insurance office of the employee's rejected offer of reemployment within 30 days of the employee's rejection of the offer. Here are some other reasons. Number 1, you're unable to rehire the same individual as we previously discussed. You were unable to hire similarly qualified employees for unfilled positions. And then finally, you're simply unable to return to the same level of business activity as before February 15th due to compliance with the guidance from Health and Human Services, the CDC, or OSHA. Wendy, what does ignore the reduction mean?
So basically, here's some examples, and the employee will be exempt from the reduction calculation. So let's say on February 15th, you had 2 full-time employees. One continued on full-time through the whole time, one was furloughed, and then when you went to bring them back, they refused the offer. On your application, when they say how many FTEs you had before, you'll say 2, and when it says how many you have now, you'll say 2. You just ignore the person who has no longer come back. Another example, on February 15th, if you have 3 full-time employees, 1 continued to work full-time, 2 worked reduced hours, but both of them liked their new hours and refused to come back at full-time. So again, you'll ignore that reduction and just put 3 on your forgiveness application. Okay, so how do I calculate an FTE?
So it's a new concept for a lot of people. Full-time equivalent is not full-time employee. It's closer to it.
Back and forth, remember the number was 30 at one point in time.
That's right. It's closer to it now, but it's the grouping of employees that equal 40 hours. So it can be a single individual who works 40 hours a week or a combination of employees whose hours total up to 40. Now, as Wendy mentioned, the original act was 30 hours made an FTE, and they've brought it more in alignment with what I think is reality, that 40 hours is a full-time equivalent. So here's an example. Doc Smith works 40 hours. Susie, who's a CA, she works 36 hours. Mary, also a CA, 15 hours. And Jane is a CA. She works 15 hours. So if we do our calculation, 40 for Dr. Smith, 36 for Susie, 15 and 15 for Mary and Jane, that equals 106 hours divided by 40. That gives us 2.65 FTEs. We have a form in Breakthrough Coaching called 17A. It'll help you analyze that. Now, if you cut Mary and you don't bring her back, your reduction to FTE is going to be 2.275. That would be a 14% reduction. Here's another more simplified way to calculate the same thing. So Dr. Smith at 40 hours, he equals 1 FTE. Susie at 36 hours, even though she's close to 40, she's still considered a half FTE. Mary at 15, a half. Jane at 15, a half. If we add them up, 1 plus a half and a half and a half, that's 2.5 FTE. Same thing, if we cut Mary, we don't bring her back, our reduction in FTE is 2. That would be a 20% reduction. Now that's a larger reduction because of the rounding. So, Wendy, my employee was reduced in hours, which cut their wages also. Will they be subject to both reductions in forgiveness?
So no, you can't be doubly penalized. So your salary and wage means what their line item on their W-2 is. So if they make $45,000 and you brought them down off of that $45,000 mark, that's a reduction. If they made $15 an hour and you brought them down to $13, that's a reduction. But if their total salary was changed because their hours were changed, that if you change their hours, that's a head count reduction. You can't be doubly penalized. So head count goes first. As long as their line item number stayed the same, then only head count would be used. Now, if you reduce them both, then both would be used. So here's an example. If they worked 40 hours per week during the reference period, that's one headcount for FTE. During that period, they reduced to 20 hours per pay period. That FTE now comes down to a half. There was no change in that employee's hourly wage. They still got paid the exact same amount of money. That means only the headcount reduction is going to apply. The change in wage is caused by the hours change. So, is my paycheck paid by PPP funds considered taxable income?
This is one we get asked a lot, Wendy. And so the answer is yes, it absolutely will be. Payroll. All payroll amounts are recorded on a W-2, and it's going to be considered taxable income. So you'll want to rely on your personal and your business accountant, make sure that they know that these monies are coming in from your PPP.
Excellent.
Wendy, are the PPP loan funds counted as business income?
So this has been going back and forth. We've got the PPP funds, we've got grants, we've got HHS money. There's lots of money coming from all different types of things. So it's gone back and forth. But at this time, we believe that the PPP funds will not be included as business income. So your bookkeeping software, I would definitely use it to help categorize these amounts and definitely use an inform account. So what I did is I made a COVID account. And then inside the COVID account, I've got one for PPP, one for HHS, one for grant, one for state, whatever is in there. So because likely things might change again, because they still got all the way till we do taxes to make any changes on these type of things, I can just recategorize and move them in my QuickBooks file. So is it true that expenses paid with forgiven PPP funds may not be used as a tax deduction?
Well, Wendy, the answer is yes. So technically, if your forgiven funds are used for payroll and utilities, those amounts are no longer considered an expense incurred by the practice, and that means they won't qualify as a deduction for the practice. Now, this only applies to the amounts that are forgiven. I'll give you an example. If you paid 2 months of rent with your PPP funds, then the rent for the other 10 months is going to be eligible to be labeled as a normal practice expense and deduction. Now, note there is a proposed bill in the House to reverse this. It's super important, as you mentioned before, Wendy, to have an informed accountant. And an informed accountant is somebody who's informed about these specific programs, these SBA loans and forgiveness. Not all accountants are. And as you know, there are Thursday meetings that take place, and bankers and accountants are on there, and they're hashing through all of the updates and changes. And so somebody really needs to keep their eye on the ball. We're helping out for you here in Breakthrough Coaching. We're watching it all the time, and we're passing it by our accounting firms. But it's also important that you have somebody, when your signature goes on that 1040, that you're making sure that you're totally up to speed. And like everything, Wendy, document. If it's not documented, how are you going to prove it?
Well, and I also recommend, we didn't put this on here, so I just spoke to my accountant yesterday. We're doing, we're starting third quarter. You've usually got some tax planning in here. Tax returns for last year likely haven't, they're in the process of being put in now, and we're supposed to be planning, what am I paying out? So I really am recommending, my accountant, she's estimating high. So all my estimated payments are going to go in a higher amount because I don't want to have to write a big check later. And I would really recommend staying budgeted for the rest of the year and putting a savings account in place, because there's no way, even if we predict it the way it is right now, if they change what is an expense and what is not, and what is income and what is not, all of your planning is out the window if they change all the guidelines. So I would be prepared, be super good about budgeting and making sure you've got some money left over to pay some extra taxes in case you need to, because there's no way to really accurately predict what's going on.